What's up, Mike? Thanks for joining me.
Oh, thanks, Richard. Always great to see you. Good
Oh,
morning.
good morning. Uh, Listen, man, you've started Ultimate Mortgage, and I brought you on here because I want everybody to understand the amount of work that you put into starting this company and the early successes, struggles, all of it. I want you to go through all of it with me. We got just a power 15 minutes. Before we get started, we picked out a couple people, you and I, that we want to just highlight on LinkedIn and talk about really quick. These are people that you want to just talk about real quick. Let's just share my screen. Start with Daniel Habib, Barry Habib's son. If you don't know who they are, check out MBS Highway. This is Barry Habib's son, Daniel Habib. What do you got, Mike?
Oh, well, hey, just wanted to give a big shout out to Dan Habib. My entire team and I watch Dan and Barry every day, watch their morning update, and really use their website to help educate consumers every day on where our rates going. The whole world has the same question every day. Are rates going up or down? When are they coming down? I thought they were coming down. Why aren't they coming down? And you really need to be armed with as much information and resources as you can in today's market so you can answer those questions. And Dan and Barry do a great job every day educating our entire industry on what's going on in the world of interest rates. So big shout out to Dan Habib. Thank you for everything that you do to help us.
There you go, Dan. You give Mike send him a text. Say thank you for the shout out because I think people listen to Mike. All right, let's jump in here. We got Matt Ishby. I think most people, anybody who's looking at this has heard of this man. This is the head of UWM. Mike, please take it away.
Well, 28 years ago when I started my first mortgage company, I was a broker for about 10 minutes. And I couldn't wait to go get my first warehouse line, start doing mini core business, go out and get my full eagle, start doing FHA business as a full eagle, go out and get delegated, hire underwriters, and start operating like a full lender. Eventually, right, hiring and bringing in a capital markets team, starting to hedge, and being a full blown lender, servicing loans, and all of that. 28 years later, I've decided to do the complete opposite. Today, Ultimate Mortgage Brokers is a brokerage and not a lender. And I love, love, love this model. Uh, Matt Ishbia has made brokering sexy again.
Hmm.
He's brought it back into fashion for all of us. And the model is incredible. It is so appropriate for where we are today coming out of the last 4 years. This model allows loan officers that were closing 10 loans a month who are now closing two, right? Because the market is different, to make more money. It gives them the flexibility to be competitive so that when you're competing with banks and credit unions and everybody else, you can still win that deal. So when you're not doing 10 loans anymore, when you're doing two, you want to make sure that you win every deal. And as a broker, you have incredible flexibility to do that. And again, this model has evolved and changed over the last 20 years so much to where it is back in fashion. People are leaving the lender model, the IMB model in droves, coming over to the broker model for all the reasons that I mentioned. And it's all thanks to Matt Ishby and what he's created at UWM. So thanks, Matt. Really appreciate everything you did for our industry, for the broker model, and everything that you continue to do to support all of us that are brokers and our partners of UWM.
There you go, Matt. You've impacted a lot of people's lives, and you just heard it from Mike. So thank you very much, Matt. All right, Mike, let's jump into it. Let's talk about Ultimate Mortgage. All right, so you stepped away from your last role and you started a company, Ultimate Mortgage. Talk to me about how did that come to be? Like, when did you decide to do that? You've got a beautiful family. I'm sure it was a hard decision, because it takes a lot of energy to start a company. So please talk me through that decision.
Yeah, so again, I've been doing this for about 28 years. I've started four mortgage companies, grown them, sold them. Uh, Recently, back in July of 2025, decided to step out of my role as CEO of a big independent mortgage bank and start a new mortgage company called Ultimate Mortgage Brokers. And I did this because I saw the industry changing. Obviously, it's changed a lot in the last 4 years. We went from one of the biggest booms in our industry's history to one of the most challenging times in our industry's history. Since November of 2021, really through the present, industry, I mean, inventory, is challenged and has disappeared. Interest rates, have hit, 10-year highs, and the business has just become incredibly difficult. And like I said earlier when we were talking about UWM, loan officers that were closing 10 loans a month are closing two. Those two loans, you got to hold on to them. And now you're competing with every IMB, banks, credit unions, and you have more people competing for less loans. And so it's gotten incredibly competitive. And in the IMB world, very, very difficult to compete because there's all this layering of margin. You have managers and managers who manage managers and managers who manage managers. You have regional managers and area managers, and so you have this layering of margin. Everybody gets a couple of bips, and it really impacts or affects price. In addition to that, IMBs, you hear that it costs 10, 11, 12, $13,000 to close a loan. Well, that's because IMBs have very expensive and in many cases unnecessary technology, marketing, and other expensive resources. I'll give you an example. We use a specific at my last mortgage company. We used one of the top industry enterprise CRMs, and we probably spent $500,000 on that technology. We used Encompass for our LOS, and Encompass is incredibly expensive. And when you add on all of the different technology and marketing that's required in an IMB model, and you think about what we pay underwriters and closers and funders and post closers, and when you think about EPOs and EPDs, it's an incredibly expensive model. And so between the layering of all of the bits for all of the different layers of management, and onto that the expensive technology and marketing and everything else, you have to charge more for your mortgage, and so very hard to compete. In the broker model, it's completely different. And again, this is a guy that's been doing this for 28 years, relearning everything about our industry as I've gone from being a full-blown lender, underwriting, servicing, and everything else, back to my roots and brokering loans. I can hire 20 loan officers today and not have to hire an underwriter, a closer, a post closer, marketing, technology, and all the other people that you have to hire at an IMB, with much less risk and much greater reward. And so I started realizing that the IMB model, in my opinion, right, was really, really, really becoming somewhat antiquated. And loan officers who are not closing what they used to close want two things. They want to get paid what they're worth, right? And they want to make enough money to be able to support their family, accomplish their goals, and they want to be competitive and they want to be able to win every deal. And you can't do that in IMB. You can in the broker model. And so that was really the impetus for leaving my past position and starting Ultimate Mortgage. And it's been a lot of fun. Obviously, not without challenges. It's a lot of work. When you are the CEO of an IMB, you have a marketing team and a technology team and an underwriting team, an ops team, and all of this support. And then when you start your own company, it's just you, as many of you know. And so you become head of tech, head of marketing, head of operations, head of sales, head of capital markets, and it's sort of all on you. But that's what I love. I've started 4 companies, I've built and grown them, and I really love the startup phase, and that's where we are today.
Yeah, I love the where you started that off in terms of the conversations we have when I'm working and I'm talking to a new potential client. We talk about their margin. How much are they paying, for example, their loan officers? Is there a manager above them? And because I really want to get down to is there ROI for the investment in, working with Monster Lead Group? And it's hugely different amongst brokers even. It's hugely different. You'll have some that are paying 50 bips, some that are paying, a flat four or 500 bucks, and then you'll get some that are paying 50 bips for the loan officer, 50 bips for a middle manager. Then there's a VP on top that's making some. After a while, you start to lose that margin that makes, lead generation profitable, right? And getting ROI for it if you add in too much middle management. So it's you're speaking directly to me, and I'm sure a lot of the audience that's going to be listening. In terms of like the investment you've put in, both in terms of time and money, like what do you think's where, where do you think you've spent the most time and money? You think is it tech? Is it staff, training, something else entirely, getting licensed in states? I don't know. I'm just curious.
Yeah, I mean, when you're starting up a mortgage company, everything is expensive. First you have to make a big investment in human capital, right? So you do have to create some infrastructure, even in a broker model where you don't need underwriters and closures and post closures in certain positions, you still need, a small ops team. And so setting that up, is expensive, right? You're spending money before you're bringing in revenue. In addition to that, we want to be licensed by June or July in about 45 states. Today, we're in about 18. And getting licensed is expensive, right? There's definitely a cost to that. You have to capitalize the business, right? Even in a broker model, you want a couple of warehouse lines so that you can operate as a non-Dell correspondent. And so you need a certain amount of net worth in your business. And then, yeah, of course, starting to do some marketing, starting to invest in some technology, even if it's, a light LOS or CRM and other technology to support the business, right? All of those things have costs. It's the licensing cost, seat cost, and then, potentially, paying consultants to help set up and integrate some of those systems so they all work well together. So, there is a fairly significant cost in this model, but it's very different in a broker model than it is in an IMB.
Yeah, totally. And in terms of where you're getting business from, how would you break it down if the traditional model for retail is going to be working with realtors and referral partners for the majority of the business. I know there's a lot of brokers and a lot of businesses are buying leads. Where do you think, what's your breakdown where you think that's going to change over time?
So when we got started, our strategy, our model was simple. We wanted to be half retail. I call it retail. Retail is the typical loan officer that builds and maintains relationships with real estate agents, investment advisors, CPAs, accountants, attorneys, that in turn, refer business clients to that loan officer. Self-generated, some people call it self-generated. I call that retail. And then the other 50% of the business is going to be consumer direct. And I love the consumer direct business. I've been in it. In every business I've been involved in, there has been a consumer direct component. And whether, we do direct mail, we use Monster Lead Group, to create opportunities for us, or we buy leads from your typical lead aggregators, some local, some national. It's all part of the platform. And so we really want to maintain a 50-50 balance of retail and consumer direct. And it's two completely different loan officers, two completely different models. Compensation and everything, is completely different in those two models, but a great balance for each other. And the two of those can actually really work hand in hand. And I'll give you an example. So, our retail model, would allow us to hire loan officers all across the country, right? As we get licensed in more states, we'll have loan officers all throughout the country, and they could be in a branch structure, or they could just be corporate loan officers working in an office or out of their house, working with local realtors, again, investment advisors, CPAs, accountants, attorneys who refer business to them. But one of the things that a lot of mortgage companies don't do is supply leads to that retail loan officer, especially in the broker model, right? Where more of the money goes to the loan officer and less to resources and leads and things like that. It's, it's sort of an eat what you kill type of a model. Here, we're creating a little bit more, at Ultimate, we're creating a little bit more of a hybrid type of a model. We want to be able to develop leads in our consumer direct group to support our retail loan officers. So here's what I mean by that. In our consumer direct group, we're generating leads, purchase and refi, for people that want to buy or refinance a house. On the purchase side, our goal is to generate leads for people, consumers, customers, borrowers who want to buy a house. They go online and they fill out a lead form, and they're looking to contact a lender and get pre-approved before they reach out to a realtor. So that type of a lead, 90% of those customers that reach out to us they're not yet working with a real estate agent. So in our consumer direct group, we can develop those leads, warm them up, pre-approve them, and then we can share those leads with a local loan officer in the local market who can then take that lead and find a realtor in their local market to share that lead with, right? And so in that scenario, we call it a type of currency, right? Imagine if you're a loan officer in a local market and you have an inventory of leads for people that are already pre-approved that are not yet working with the real estate agent, and you can share those with your realtor partners. And that sort of is the hybrid model. And we love that, right? That loan officer doesn't have to take leads, doesn't have to sit behind their computer all day. We have a team of people that are doing that in our consumer direct group, but we share those leads with the local loan officer who can share that lead with their local realtor to help give back to the people that refer business to them.
Yeah, that's a proven playbook, and I love hearing that. I keep these real tight, Mike. That was awesome. Everything you've shared with us so far. Will you just real? I want two things from you, if you don't mind. One is, what does the future look like for Ultimate Mortgage? And the other is, you were telling me a story that I thought was pretty cool about, you recently met someone. So if you don't mind, maybe we could end on that.
Sure. So where are we going from here? Look, in the next couple of years, we want to hire a couple hundred loan officers into our retail model and into our wholesale model. Again, I'm sorry, into our retail model and into our consumer direct model. Again, one of the things I love about this model is that it's very scalable. I can hire 100 loan officers in this model without hiring, 20 underwriters, closers, funders, post closers, and all the expensive tech that goes along with that. And so there's good opportunity to build and grow. And our plan for growth, our strategy for growth, is to take loan officers away from IMBs, right? Away from banks, credit unions, and independent mortgage banks, where the costs are just too high today. Come over to the broker model. It's so easy here. Come check it out. The water is warm, I promise. And you're going to find that you can be more competitive, you can make more money, you can be more successful, and there's really unlimited potential here. So that's number one. So I think we're going to grow both our retail and our consumer direct group, at about the same scale, and one will again support the other in sort of that hybrid model. So really excited about that, the future opportunity here at Ultimate. Uh, Last week I was in Palm Beach, and I went down there really just to get out of the cold here. I don't know what the temperature is where you are, but it's going to be -10 this weekend, and yes, 7 degrees. Okay, well, I think it was -1 today, and all week it's going to be somewhere in the somewhere between -10 and 10 degrees here in Columbus, Ohio, and that's cold. So we went down to Palm Beach, just for a long weekend to get out of the cold. And a friend of mine invited me to come have lunch over at the Trump International Golf Course, and I'd never been there before. So we go over there for lunch. We went into the dining room. We went out onto the back patio, and who's sitting there hitting balls but Donald Trump? And so a friend of mine that had invited me there knows the president and said, "Hey, do you want to meet Donald Trump?" And of course, I said, of course, who wouldn't want to meet the president? So he brought me over. I got to shake hands with Donald Trump, which was really cool. I told Donald Trump that I told the president that I've been in the mortgage business for about 28 years, and I wanted to play into his ideology, and I said, hey, we gotta get rid of this guy, Jerome Powell. We got to get somebody in there that's more favorable for interest rates, and so the president asked me who my recommendation would be for the next Fed chair, and I didn't really expect that question, but I said, well, probably I guess one of three people. I said maybe Kevin Warsh, which I know was at the time his top choice. I thought that would resonate. And I said, by the way, I also think Jamie Dimon, although he probably wouldn't take the job, would be a great pick, or maybe even Scott Bessent. And so, Donald Trump at the time said, well, I agree with Kevin. I think he's a good guy. I think he might be our next Fed chair. So that was cool. And then we talked a little bit about the 50-year mortgage. And I asked him what his thoughts were on the 50-year mortgage. And he said, well, you really ought to talk to my golf partner over here and ask him. And so he introduced me to Bill Pulte, and we got
Oh,
to take a picture,
wow.
I thought
Did
was
you
really
recognize
cool.
him? Did you recognize him?
I did, of course. Yeah,
Yeah,
absolutely. I mean, listen, this when you've been in the mortgage business as long as I have, those are your heroes, right? And so I thought that was really cool. And so I got to meet President Trump and Bill Pulte, and then I had a great lunch. So that's my story.
it's a great story, man. That's cool. That's a great send off too. Mike, I don't want to keep you too long. I promised I'd get you done by in a short amount of time here. So thank you so much for sharing your story with everybody. I'm sure we're going to see a lot of chatter on LinkedIn.
Hey, well, Richard, thank you very much. Always great to see you. Appreciate everything, and we'll talk soon. Thanks.
Awesome.